Looked like we were in pretty good shape, but then we can't quite punch it up either. 57.27 and change.
Yeah, it's going to be a little bit difficult going into the close here, Oliver, but we do have the ingredients to have a melt up if we are able to break through a very critical area, which is going to be around 57.35. That's what we want to break through probably in the next like 10 minutes in order for us to have a melt up here. And the reason being is actually the 57.30 level right now has around $60 billion worth of estimated gamma exposure. Now, traditionally, you would try to see dealers really selling into that or basically trying to close below that 57.30 level, which is the environment that we're in today or right now. But if we do have excessive amounts of call buying going into the close, trying to bring us above that level, then you're going to have those dealers really getting into the futures market, be able to buy those futures contracts in order to hedge themselves. And that would be kind of that melt up reaction. So for now, we are seeing dealers kind of fade this and rightfully so. But if you kind of get the retail traders out there to really try to get into those 57.40 calls or those 57.50 calls, it could be enough to try to break us up and out. The other environment that we are seeing is actually really healthy call volume or just options volume alone. The top traded contract, which is that 57.30 level, is sitting at around 97,000 contracts. That's the highest that we've seen probably in the last, let's say, 3 to 4 trading sessions. And the next one coming in right after that is the 57.40 call, which is sitting at around 70,000 contracts. So enough trading activity is taking place. We have that gamma wall, which is going to be hard to break, but if we can break it, a melt-up scenario could take place here.
Okay. Seems like we're trying, we're probing, It's good to be in that area at least. It's nice to be able to be that close to the goal.
It is. The only thing that's going to be holding us back here, Oliver, is going to be the Nvidia trade. And you and I were kind of talking offline about that. I mean, it was a remarkable move to the upside. You saw a lot of call buyers getting into Nvidia after that announcement or that article around Jensen Huang and not selling any more shares for the near term. But if we see an unwinding of those speculative calls into Nvidia, then that could also then have a marginal impact when it comes to the broader S&P 500 just because of its market weighting. So you really want to see Nvidia ramp. Nvidia ramping up could actually be that catalyst to really try to break us through. That wall is going to be a hard wall to break. $60 billion is nothing to sneeze at here. But once again, we have the ingredients to be able to do so. It's not an environment where we only have 40,000 or 50,000 contracts being traded for the top contract. We're pretty much double what we saw actually yesterday at this point in time.
All right. Look, it's still an improvement, right? Especially to see the gamma trade basically work to put in the floor. We go up to the other end, taking shots on goal. Seems like we're in a pretty decent place. We did see volatility around consumer confidence, though, that, to your point about kind of the macro situation, it does seem like a reminder that there is definitely potential to move around these economic prints. Like, we're still alive, we're not like totally out of the woods, it seems.
Oh, yeah, definitely. Especially that consumer confidence print. I think it was the biggest 1 month change that we've seen to the downside in over 3 years, if I'm not mistaken. And then if you kind of combine that with the Richmond Fed data, where we're pretty much hitting very close to COVID lows when you're looking at new orders, and even if you're looking at the headline index themselves. So there's definitely the data sets that did not provide us a lot of confidence for today. But if we look at the open interest chart, you are exactly right. The 5,700 level, we saw buyers actually stepping in. It took a little bit of time, but we actually did see some buyers stepping in, a nice little candle, a reversal candle that took place. And then we rocketed it to the upside and actually kind of contained this upward channel that we've been monitoring. And we actually haven't broken that channel except for today. It's been intact since Friday, which is ultimately bullish. Now we're pretty much testing that 20-period moving average on the 15-minute chart. If we can continue to ride that to the upside, 3 candles before where we are at right now, a very strong hammer candle, which is also bullish. If that can continue to stay intact, we continue to ride that 20-period moving average. Once again, this kind of sets you up to try to battle that 57.30. I'm not saying that we're going to get through there, but if we were to get through there, I mean, you could see one of these, 15-point gap up type of moves leading into the last 10 minutes of today's session, if that's going to culminate here.
Okay. And as far as downside goes, market still seems to be just gravitating higher, kind of continuing to push up the lower end, but has it followed to the extent you would expect, or are we waiting for kind of a bigger breakout to see the puts all get rolled up too?
Yeah, I mean, the puts are continuing to get rolled up. You know, the job of that market maker or these market makers today and being able to try to hold that level, it was exactly what you wanted to see if you were a bull, because it did get a little bit dangerously close there to being, you know, for us pretty much flipping and having a pretty decent sell-off day. But that battle was able to be won by the bulls for now. And if we're going to see the same type of reaction to the upside, then you could actually expect some compression at that 57.30, having them sell into strength. But over the longer term time frame, that's ultimately bullish for this market. So we'll continue to keep that up. And I think that we should be fine with that. I probably won't talk about it now, Oliver, but there is actually a development on the 1-year daily chart for the SPX to just be mindful of. We are starting to see some divergences when it comes to RSI and CCI. Volume for the E-mini S&P futures is starting to dry up a little bit. We're not seeing that in liquidity yet, but if we are going to see liquidity kind of dry up here, we might be stalling out for a small pullback in the near term before trying to continue to push higher here. Those divergences, especially when you're looking at a daily chart or a weekly chart, for the most part for the S&P 500 do hold up pretty well.
Okay. And on VIX real quick, you're looking at volatility next to the SIBO skew index. Give me the takeaway on that one. We got less than a minute, KG.
Yeah, so VIX is moving to the downside here. Skew is still to the upside. So, you know, this black swan type of being priced in. I mean, there's still some buyers of out of the money puts to be mindful of. And that's really where we're seeing that the dispersion here within the market. Nothing to be too concerned about. The skew index is a little bit antiquated and it only reprices on a daily basis. But it is actually a pretty interesting divergence to kind of see the skew index continuing to ramp up higher and higher as volatility continues to go lower and lower. You want to actually see those converge here over the next couple of trading sessions. Antiquated, but it is something to be mindful of. We're still in a seasonally, you know, volatile period traditionally, so that's something I am keeping my eye out on. Not saying that the world's going to end anytime soon or anything like that, but if the skew index continues to stay elevated, I would not be surprised if we have a you know, re-rating of the upside when it comes to vol.
Okay, all right. Seems like there is a little bit of pressure building there, even as VIX coming down. I like that nugget. Thanks, KG. Good stuff. You the man. Coming up,